Hello everyone, this is Frayal, your real estate agent. In today's video, we are going to dive into the latest market update for the Greater Toronto area. The fall market upon us, I'm also going to do a deep dive into what has unfolded during our summer real estate market. We're going to touch on average home prices, monthly inventory. At the end, I'm also going to talk about the key economic factors such as interest rates, inflation, unemployment rate, and we're also going to touch on the housing start. So I hope you can stay till the end because this video is going to be full of information. So let's get right into it. First things first, let's talk about the numbers. What we saw that sales actually went down by 5.3%, sitting at only 4,975. So there was less activity in the month of August. When it comes to new listings, they actually went up again by 1.5%. So that means we still had a good amount of inventory coming to the market. Active listings were up by 46.2%. Many homes were moving a lot slower in the market. And of course, condo apartments have a major contribution to this. And average home prices also went down by 0.5% year over year. Now let's dive into what we saw in the world of real estate starting from the month of May up until August. I've created two charts for you guys. So the first chart, we are going to focus on the average home prices for different home types in the Greater Toronto area during those summer months. And then in the next chart, we are going to take a look at what the months of inventory looked like throughout the summer. So let's get right into it.
In front of me is the chart that I first created for the average home prices starting from May up until August. I've divided all the categories: detached, semi-detached townhomes, free townhomes, and condo townhomes and condo apartments. So for detached homes in May, we started over 1.5 and we ended over just over 1.4, saw a decline of 6.14%. Overall in the Greater Toronto area, for semi-detached homes, we started over 1.1 and ended up just over 1 million, saw a decline of 12.55% in average home prices. Townhomes, when it comes to townhomes, we were just over 1,040,000 and then we ended up at less than 1,991,000. And we saw a decline of 4.69%. Condo townhomes, so we also saw a decline. We started at over 836, ended up at 760, decline of 9.07%. Condo apartments, we started at 730, ended up at 674. Again, we saw a decline of 7.67%. I think the most decline we saw in average prices was in the semi-detached apartments. Now let's take a look at what the months of inventory did for each type of homes in the Greater Toronto area. So now in front of me is the chart that I created for the months of inventory. So we have been pretty good when it comes to the number of homes that entered the market, and we had a good amount of inventory by the end of August. So when it comes to detached homes, we started just over 2 months of inventory, closer to 3 months, and we ended up over 4.33, which means we are pretty good in the buyer's market. Semi-detached was pretty low in May. We started at 1.7, ended up just close to 3 months of inventory in August. Townhomes, we were at just over 2 months of inventory and we ended closer to 4 months. Condo townhomes, again, we were at closer to 3 months of inventory in May, ended up in close to 5 months of inventory. And condo apartments, of course, saw the biggest increase. We were sitting at over 4 months of inventory. And we ended up at closer to 6 months of inventory. So of course, condo markets, as we know, we have tons of inventory available to you. And if the inventory keeps up and we have more homes coming to the market, then of course, even when the interest rates go down, we will have a good chunk of inventory sitting on the market, which will take some time to absorb. So we do have good amounts of inventory right now on our hands. So if you are someone who is a home buyer looking to buy homes, you definitely have more options available in all different categories, whether it's a detached, semi-detached townhome, condo townhome, or a condo apartment, which means you definitely have more negotiation power when it comes to that.
Now let's talk about the economic factors. Number one, we're going to talk about is the interest rates. Now we know that interest rates definitely played a major role and made some drastic changes in our real estate world. Let me put it this way. The 1 to 2% that we saw during the 2020 year, it was not normal. And of course, the 18% that we used to have back in the day was not normal either. So somewhere in the middle is where we need to be. Now let's take a look at the history quickly of what the interest rates look like starting 2022 up until now.
Let's talk about the interest rates. As we know that in September, interest rates also got cut by another 25 basis points. So we are sitting at 4.25% with the expectation that they will go lower. The expectation is that the interest rates will go further lower beginning of January as well up until mid 2025. So let's take a look at the history of the interest rates. Of course, we were sitting at pretty low, below 1% up until February 2022, and then the interest rates started to go up. They were constantly going up. At one point, we were at 4.5 in January 25 to 2023. Stayed pretty steady up until June of 2023, went up higher again. And then we were pretty steady at 5% for quite some time. And then up until May 31st, 2024, we were still sitting at 5%, and that's when the interest rate started to fall down. First cut we saw was 4.75, then another cut we were at 4.5, and now there's a third time consecutive in a row. We saw another cut, and we are now sitting at 4.25%. The next announcement will be October 23rd, so forecast is 4.25. Who knows if we are going to go down another 25 basis points or 50. That is something we can't say for sure, but definitely another cut will help and move the needle a little bit more faster in the market. About interest rates further, we saw the new article that was posted by CTV News that how will the Bank of Canada interest rates cuts affect personal finances. So of course with the interest rate cuts that we saw, is not going to be a big relief, but is definitely going to, Canadians can expect a little bit more relief when it comes to paying off those credit card debts, home equity line of credit, and variable loans, or any loans tied to Bank of Canada's key interest rates. Now we know that it will take some time for people to really start seeing more relief coming their way. At least next to 6 to 18 months, we'll see more of that relief coming your way as well. When it comes to the housing market, of course, the interest rate cuts that we are seeing right now is not there to reignite the housing market yet. So its article, it says over here that it's not a seller's market yet. It is still a buyer's market. But as interest rates come down, that definitely will mean that more and more people will be able to qualify for that mortgage, and that will definitely bring up that demand for housing. Now let's take a look at the Canada inflation rate. So we saw that the inflation rate fell down to 2.5% in July of 2024 from 2.7% in the previous month. Now we're definitely on our way to achieving that 2% mark that was initially spoken about in the beginning. We have come a long way, starting from 4% in August 2023 all the way down to 2.5%. Now the next announcement will be on the 17th of September, so we will see what the inflation will come down to. The previous is 2.5%, of course. When it comes to different type of inflation, food inflation was also down from 2.80 to 2.7, rent inflation from 8.9 to 8.80. These are not big differences, of course, but over time, if it keeps falling down, we'll definitely, hopefully, reach that point where we will start feeling the pain less and less in our spending, in our budget, in our expenses. But keep in mind that when the inflation starts going down, a lot of people expect that they will start seeing results right away. This is definitely something that we need patience with, time with. However, it is a good news to see that we have come this far along the way when it comes to inflation. Let's take a look at the Canada unemployment rate history. We know, as I was mentioning earlier, that it did grow to 6.6% in August from 6.4%, the highest since October 2021, and is definitely surpassing market expectations of 6.5%. Now, if you look at it, we started from 5.5% in September 2023, going higher and higher, and then it went down again to 5.7%. And now we are very well over 6.6%, and now we are seeing that we are sitting at 6.6%. Our next announcement will be on the 11th of September. So we'll find out what the unemployment rate looks like. But if you go down and want to bring your attention to minimum wages, as we saw that the inflation is still pretty high when it comes to service industry, and that's mainly due to the higher minimum wage cost as well. As the minimum wage goes up, the cost of providing those services, of course, go up as well. But we know that from the unemployment rate, it's mostly the youth that has been affected. Let me show you an article that talks a little bit more about that. An article posted by BNN Bloomberg, which talks about how Canada's unemployment rate approaching varying levels, senior economists. So what they're saying over here is that we basically started from a low unemployment rate to normal, and now we are starting to approach worrying levels, because we were supposed to be closer to 6% or a little bit higher, and now we are getting way above that. What they're talking about over here that is important to note is that the softening demand for labor in Canada is disproportionately impacting those who are looking for work compared to those who are already employed, as layoffs have been kept at lower levels than usually seen during job market downturns. So which means that the most difficulty right now that we are seeing in labor market is finding a job, but people who are already in their jobs are secure, so the job security is there, the layoffs are low. However, people who are entering the market, into the job market, are having very difficult time finding a job when it comes to that. And also talks about the youth unemployment, which I think is a major factor contributing towards the higher unemployment rate, which rose to 14.5% according to Stats Canada, the highest since 2012. So that, of course, also tells us what our housing demand will look like in the next 10 years, because if this youth is unable to find or secure a job and they come out of their universities and getting into the job market, then of course it means they won't be on the right path or trajectory in terms of saving the money or getting into the housing market in the future. So that definitely affects that in the long run when we're talking about housing and youth unemployment. But however, people who are in the market have their jobs, are secure, and that's why maybe we don't hear so much about unemployment being so high and unbearable for a lot of people, because it's not really affecting the people who are in the jobs already. It's mostly the people who are looking for jobs and about to get into the market are the ones who are having the hardest time.
With these unemployment rates, the chances of interest rates cuts is definitely higher in the near future. So what will happen to home prices? I personally think that they will drop further until we start seeing some significant interest rate cuts. Now, even if the interest rates do go lower, it will take some time to see demand for housing go up. If the inventory keeps up and stays the way it is, the market will take some time to absorb the current inventory, of course. Now, another question I get asked pretty frequently is that, are the home prices going to reach the peak point again? I personally don't think so. I think the peak home prices are behind us. We won't see those prices again, unfortunately, if some people out there were hoping for that. Now, keep in mind that was artificially created by lowering the interest rates to absolutely nothing, which was a crazy thing to do. Another thing that you have to keep in mind that will play a significant role whether the demand will pass the supply is that the housing starts are keeping up and there are more homes being built faster to avoid being in the same situation that we were in, where of course the demand surpassed way over the supply. We also have to keep a close eye on the immigration numbers. Now, a recent article posted talks about this in detail, so let's take a look at that.
Talking about Canada immigration and the targets, there is an article that posted recently that talks about Canada Immigration Minister plans major revisions to permanent resident targets. Now, we know that initially it started that 60% of Canada immigration was economically driven to fill out the labor shortages that we were facing, correct? Now, when that happened, the targets were pretty high. I mean, in November 2023, the government actually suspended the permanent resident targets over the next 3 years, which were, if you look at it, 485,000 permanent residents in 2024, 500,000 in 2025 and 2026, which are more than double compared to 296,000 permanent residents welcome in 2016. Now, the problem with that happened is that took a major toll on our Canada housing supply, infrastructure, especially in major urban cities, because a lot of people who immigrate to Canada end up being in the major urban cities, right? Especially when it comes to Ontario, everyone is in the Greater Toronto area. So we saw that our rents went skyrocketing. Our housing market has collapsed completely. Supply was never there. Demand was pretty high. So a lot of things we face, and just day-to-day infrastructure, traffic is out of control. Everything is out of control. So the good news is that they have suspended those unbelievable targets that were there. So this is something we need to keep a close eye on. Another interesting fact they mentioned over here is that according to National Post article, 50% of Canadians in March said the country was admitting too many immigrants, and we all can agree on that. But that number reached 60% in July, and this July figure is the highest dissatisfaction rate with Canada's immigration policies in decades. Now, what they're trying to say, we don't know the exact plans on how they're going to do this, but they are coming up with a plan that is more sustainable, keeping in mind what it will look like when it comes to admitting these people and how it will address concerns about housing, infrastructure, and social services. Now we know that our housing supply could not keep up with all these people coming in, and that definitely took a toll for all of us who have been living here, because this will definitely be directly correlated when the interest rates go down and we will start seeing demand go up. Of course, building new homes will take some time, and it does, because there's so many other things that are involved with that. However, the immigration numbers will play a big role in our housing market in the near future.
Now let's take a look at the housing start.
So in front of me is the monthly housing stats that I was able to get it from the CMHC website, and we're going to take a look at Ontario because that's where we live. And what I see is that when it comes to single detached homes, actually the housing starts fell down in July by 21%. From they were initially 8,622 single detached units that started in July 2023, and then in 2024 there were 6,769, and then all the others also dropped by 8%. So there were 41,879 units that started in 2023 July, fell down by 8% to 38,569. So of course, if let's say in the future interest rates go down and the demand for the detached homes go higher, then we don't have enough supply being built that will keep up with that demand. So definitely we will see that detached home prices might go higher, or if the demand goes higher for it in the near future. Based on the housing starts, we just don't have enough homes, single detached homes being built. However, when it comes to other units, that also went down. So looking at the numbers, I don't think we have that number going higher or being built faster, because if it's decreasing every year, I don't know what the next year will look like, but that's not a good sign for us. So we definitely need to build a lot faster before the interest rates go further down and we start seeing more and more demand coming into the market.
Another article posted by BNN Bloomberg talks about new construction projects, which unfortunately has slowed down quite a bit due to heavy end users being investors. Many of these projects are on hold as it don't make sense financially for many of these investors with higher interest rates. Many of these projects are just not cash flow projects. Let's take a look at the article.
The article posted by BNN Bloomberg talks about how Toronto's condo market gets worse as pre-construction starts falling off. So they mentioned over here that the last month, BNN Bloomberg News reported that Toronto's condo developers saw sales of new units in the first half of the year fall by 57% from previous year, making the slowest pace in 27 years because of the high interest rates and pullback demand. It also talks about that long term you want a housing market driven by end users. When you have it driven by investors, which is the case when it comes to condo market, prices get ahead of where they should be, which is where we are at. And then when they get ahead of where they should be, eventually sales stop until it becomes balanced. So when it comes to condo markets, of course, most of the end users are investors, and many of these condo projects are just not making sense for them because they're not cash positive at this point. The construction cost goes up, of course, the pre-sale cost goes up as well. Back in the day, a lot of people used to buy pre-sale condos for a lot less price, and they were able to even sell it before for a higher price, or when they were finished, they were able to sell for a higher price to make that profit. However, that's not the case anymore. So of course, many investors have decided to pull back, and because of that reason, the new condos construction sales have gone down significantly.
Despite affordability being a big challenge, this is very interesting that I came across, and I wanted to share an article posted by RBC that talks about the younger generation still sees buying a home as a priority.
The new survey revealed very interesting facts about young Canadians who still think that buying a home is a top priority. So in this article, it mentions that for first-time home buyers under 30, home ownership is a critical part of their first-year plan. 40% said that, outranking marriage 24%, travel 30%, and buying a car 33%. Saving with purpose, 72% are allocating at least some percentage of their monthly income towards their first home, and nearly a quarter, 24%, are putting away more than 15% of their income. Only 47% of first-time home buyers are over 30 are allocating a percentage of their income towards purchasing a home. So that just remains and tells us that many Canadians out there still think that buying a home is an important part of their life.
In this market, I personally think we have tons of opportunity. Owning a home is something which is important to many Canadians, and why it shouldn't be, right? This is where you build your life with your partner, raise a family, you get old. It is a place where you live. So this is a massive opportunity at the moment in the market, especially if you are a home buyer. Now, we all know that the market right now is not most favorable, right? So at the moment, people who are listing their homes to sell are the ones who really have to sell. They probably all fall under the 5Ds. That is the most common. Number one, diamonds, which means they're getting married. Number two is diapers. It means they're having babies, so they need a bigger space. Number three is either there's a death or there's an estate sale. Number four is the divorce, or number five is downsizing. So this means that when you're coming across these homes that are listed for sale, you definitely have the opportunity and chance to negotiate that price. Now, as a first-time home buyer or investor, my advice is that do not go for a turnkey property. Go for that grandma house that needs cosmetic upgrading, because you know that that grandma has most likely kept that house intact. The roof isn't falling apart, the air conditioning is working. Buy that grandma house in the upcoming neighborhoods that are looking to grow. When you're looking to buy that home, make sure that you go out into the neighborhood, drive around. And this advice is not only for the first-time home buyers or investors, it is for anyone out there who is looking to make a move in this market. So I hope you find this information helpful and informative. If you have any questions, please feel free to reach out to me or comment below. Let me know what you think, what's going on in the market from your perspective. I'm always curious to know. And if you're someone who is looking to make a move, whenever you're ready, you can simply reach me through booking a call with me by clicking the Calendly link in my description. It is that simple, or simply text me or call me at any time. This is Frayal signing out.